Welcome to Nebraskanomics, where we help Nebraskans remove barriers to opportunity with policy research and legislative advice. I'm your host, Jim Vogel, CEO of the Platt Institute, a Nebraska-based think tank promoting policies that make it easier to get a good job, start a business, and help Nebraskans keep more of what they earn. If you want more economic freedom in Nebraska, then let's get started. Nebraskans have been promised a historic amount of property tax relief. The problem is a lot of people don't seem to know how to get it, with tens of millions of dollars so far being left on the table. Jim Greisch is here with me today to discuss the problem. He's done his share of tax returns in a long career of public accounting, and he's put those talents to work as chair of the Blueprint Nebraska Taxation and Incentives Industry Council. Jim, welcome to Nebraskanomics.
Thank you, Jim. Happy to be here.
All right, let's just dive right into it. The legislature recently promised property taxpayers that they would cover more of the cost of their school district taxes by issuing $125 million in refundable income tax credits starting this year. I don't think that there's many people who wouldn't want to get some of their money back. Yet the Omaha World Herald reported recently that more than $50 million of that money has gone unclaimed. Jim, how and why do you think this possibly happened?
Well, Jim, I think there are several reasons that some of the money has gone unclaimed. First, I think amongst the general population who, are preparing their own tax returns, there's a general misunderstanding about what a refundable or a non-refundable credit is. The complexities of returns hasn't diminished over time, and regular folks who are doing all of this on their own, often read things like there's a refundable credit available to me, and they don't really understand, what that means in plain English. For the tax preparers, the complexity of claiming the credit on behalf of, a single taxpayer, a married couple filing a return, it's not difficult. You have to have a link to the right place, and once you have that, it's relatively easy. But for a multi taxpayer entity, a pass-through entity, maybe with 50 or 100 partners, think of an ethanol plant maybe with 5,000 taxpayers. The amount of the allocated credit, really difficult to determine. A challenge to allocate, in a meaningful basis, and frankly, at some point, the juice is not worth the squeeze, and people simply give up as a result, and that leaves a lot of money on the table. I think there's an overriding factor. 1107 was passed in the last legislative session. It came into being for the first time last year with tax returns filed here in 2021, and I think we simply experienced a little bit of COVID fatigue on the taxpayers' parts. They just said, "Look, I'm not even going to look. It's not going to be worth it. The rest of the credits that I've gotten haven't been worth it." And oh, by the way, I'll wait to see how this plays out next year. So,
yeah. So you mentioned we're talking about LB 1107, which was also called the Nebraska Property Tax Incentive Act, which was passed in 2020. It was a compromise that put together three major pieces of economic legislation: a new property tax relief program, reauthorization of the state's business incentive program, and then approval of a state funding match for a federal medical facility at the University of Nebraska Medical Center. I mention all these to highlight that almost everybody in the legislature ended up voting for this tax program because they all wanted part of the package and couldn't reach agreement on anything else. And this is not even the first expensive and ineffective property tax program to come out of Lincoln, as you and I both know. So here's the bigger question: how do we get lawmakers to stop taking the path of least resistance and focus on a policy that actually works and changes the system?
Yeah, Jim. So that's the $64,000 question that besets all of government, right? I think the challenge that all of the interventions that the state has had in the property tax arena, center around a single issue, and that's that we're not solving the problem at the root cause of the issue, and consequently, the interventions that happen at the state level, they become complex and, ill-conceived. That, there's a good intent, but, it's not really solving the problem. And taxpayers look at the issue and say, well, okay, I got a $38 credit here. That's fine. There's nothing bad about it, the credit. Or $100 credit, but next year my property taxes are still going to go up because at home the mill levy rose, the valuation rose, and the $38 has no meaningful impact on what my local governmental organizations are seeking from me as a taxpayer to fund the functions of government. And until we take a look at the root cause of what's happening back in each of the provinces that levy taxes here in the state of Nebraska and find out a way to reduce the amount of property tax recovered, find other systemic solutions that fund the government through other sources that could be more resilient or, would be better understood by the population, the taxpaying population, actually all the population, we will continue to have this problem. There's a unique issue associated with property taxes. Property taxes are only levied on those who own property. And there are a lot of folks in the state who, as renters, of course, they pay a tax through the rent that they pay, but they don't see, the consequence of the issues at the local governmental level. There are other methods that we could use to fund government. And I think we have to look for those, in order to solve the problem in a different way.
Yeah, rates don't go down with this tax credit program. Valuation increases don't stop, and political subdivisions aren't stopping spending the windfall associated with the valuation increases. That's been our message, certainly. So thanks for focusing on that. So the legislature is committed to $125 million towards this program, and also committed to increasing it to $548 million. We've just talked about how hundreds of millions of dollars, or tens of millions, I should say, of unclaimed credits are not being utilized. What type of system, or what could we be doing for taxpayers with that kind of cash instead to fundamentally lower their taxes, Jim?
Well, I think a lot of it has to do with the implementation mechanisms, Jim. I think a simpler, more elegant way of getting cash back into the hands of property owners is not to have it refunded through an income tax program. The complexity of that alone is going to deter many from asking, for the credit again in 2021, notwithstanding the fact that it's going to rise by a fivefold, increase. In prior programs, a credit was actually applied to your property tax statement. There are many, I'm probably one of them, who believe that that's the simplest and most effective way of accomplishing the distribution of the funds, because it doesn't require the taxpayer then to file a return, to seek the credit, to go through the administrative exercise of seeking an amount to claim on their income tax return. The skeptic in me says the complexity of that was designed intentionally to reduce the use of the credit. That's very unfair, of course, and I recognize that. But it's a mechanism of slowing the amount of cash that flows out of state government. I don't think you're going to see 100% utilization going forward. I mean, the State Society of CPAs wrote a wonderful piece about the complexity associated with this, and I think they've very accurately said many of their clients simply said, it's going to cost me $1,000 to get a $100 credit. Well, it's not that. Let's stop. And I don't think the DOR thought through all the possible ramifications of the mechanism they chose. Admittedly, it is one that requires the taxpayer to take some affirmative steps to claim the credit, and there is some good in that. There is some wisdom in that, but there's a point at which the complexity and the difficulty outweighs the benefit. I'd go back, if it were up to me, and make it taxpayer uninvolved, meaning the taxpayer simply gets a statement with a credit applied, pays the net balance, and people move on.
Well, let's talk about how much is allocated in the budget for these credit programs that are intended to offset property taxes. We're going to hit $1 billion here pretty quickly.
Yep.
And some members of the legislature have commented that Nebraska doesn't get enough credit for these tax relief programs, either from constituents or from groups that compare states by their tax climate. So I'm asking you to put your Blueprint hat on here a little bit. Can you explain why our tax relief programs that exist now don't end up impacting Nebraska's tax competitiveness related relative to other states?
Well, sure. There's a real simple reason, and that's that they're not measured in any of the metrics that are employed by Tax Foundation or others that rate rate states against one another. They're not provided in the numbers that are reported by the DOR, and therefore they don't exist in the mind of the people who match us up against one another. More directly, I think the programs are a state intervention in a system of property taxes that isn't the responsibility of the state. So, when folks think about property taxes, there isn't a state involvement in that. And, any of these programs wouldn't make any difference which state it is. They'd all be treated the same. They're just not, they're not a part of what the Tax Foundation is looking at. Tax Foundation is looking at the things that are within the control of the state, and what's in control of the state are income tax rates and sales tax assessments. Property taxes are local governmental interventions and local governmental programs, and an intervention by the state in any of those programs simply doesn't hit the radar, of the Tax Foundation. So, or any of the other rating groups. Money Magazine, take your pick. It doesn't really make any difference. Consequently, the value that may be there is not ever going to get recorded, reported, credited, if you will, in the same way as an income tax reduction does, or a sales tax reform does, or other incentive programs may. This is not considered an incentive program in the same definition as some of our traditional programs may have been. Think 775 and all of its descendants.
So in addition to more than $50 million currently headed back to the general fund, state revenues, we learned last week, are still coming in strong in Nebraska. The Economic Forecasting Advisory Board projected a $475 million boost to state tax receipts through this fiscal year, which is a jump of about 10% over past estimates. Now, that's obviously real money. There are even some taxes we could eliminate in Nebraska for much more than $475 million, as you and I both know. But as I've told listeners before on this Nebraskanomics podcast, even in great revenue years, lawmakers often punt on tax reform because of worries that tax receipts won't hold up and be sustainable, or because the strong receipts lead senators to try to squeeze all they can out of current funding to avoid the difficulty of what you and I would like to see, which is a major overhaul to the tax system. So you've led the process of designing the Blueprint Nebraska tax modernization plan, which seeks to broaden the tax base and lower tax rates for the workforce talent our state needs. Why do you think the Blueprint framework offers a better lure than a property tax credit program?
Well, Jim, I think there are several reasons. So one of the things that Blueprint and our committee sought to prove was the hypothesis that state government and frankly other governmental entities could be funded through other mechanisms that would provide a more stable and sustainable tax base to fund the basic functions of government beyond what property taxes have historically been believed to offer. Now, property taxes are a necessary part of any program because services are rendered where people's feet are on the street, and they should be paid by the taxpayers who use those services in the local jurisdictions in the manner in which they, as citizens, inform their government that they want the services to be provided. The popular myth is that property taxes represent the most stable and repeatable form of tax revenue, and therefore they are the preferred mechanism. We're one of a few, only a handful of states, really very few, that rely to the extent that we do on property taxes as a stable mechanism of funding government. The fact of the matter is that other forms, notably sales tax, have been proven to be far more resilient than anyone ever thought that they would be as a form of funding governmental activities. Consequently, the hypothesis that we could fund government through other means was a necessary one that had to be proven. The Blueprint team proved that, in fact, though there are other mechanisms, other forms of taxation that can be used to fund functions of government and provide a highly stable, in fact, I would argue much more stable form of taxation going forward. And because we have the broadest possible participation in sales tax, it's we've reduced regressivity to an extremely low level, thus making it extremely attractive. So I do think that what Blueprint is offering is a different design to fund government across the state, both at the state level and at the local level, that would provide citizens with significant property tax relief and would put the decisions regarding choices that have to be made when goods and services are purchased in the hands of the ultimate consumer, which I think economics would tell us and the economists would tell us is clearly the preferable place for the decisions to be made. We think, the Blueprint team that is, thinks that these alternative means actually provide us with a mechanism by which to return value to the taxpayers of Nebraska in a significant way. And in returning that value to Nebraskans in a significant way, we can provide a much greater incentive to business to relocate here to Nebraska, where we know the good life is a part of what we offer, and we can show it to them in an economic manner going forward. There are all kinds of other things, Jim, that go into looking at making fundamental systemic change in tax policy. And one of the greatest impediments is, unfortunately, the inertia of doing nothing. There is a worry. I'll describe that as my worry that the legislature won't want to take on the major task of an overhaul, because doing little bits around the edges is much less difficult and it's much easier to do. And they can look to things like a $475 million boost in revenue as being the reason that we don't need to do anything. I'd argue the opposite. Those one-time infusions really say that there's something systemically at issue in the core of the policy that needs to be addressed. And now is the time, when you have the money, to take the bold and principled steps that give us a much brighter future for particularly the young workforce that we're looking to attract in Nebraska, the 18 to 34-year-olds, and gives us an opportunity to really do something that will be, for the next 50 years, a much more stable and productive foundation on which to build our state's economy.
Jim, isn't there also a danger? I hear some chatter out there from policymakers and others to make a one-time reduction in an income tax rate with this extra cash that's come through. Isn't there a risk going forward that we don't have a committed, sustainable funding source for that reduction?
No, absolutely, of course. And I think that all these one-time fixes are just another way of saying we don't have the will nor the leadership strength to go about doing what we know needs to be done, which is modifying the policy at its core in order to provide a stronger base for the future of Nebraskans. And Jim, the legislature, it has its own kind of life. You know this very well. And the motive for change needs to emerge from the population. I think the challenge that Blueprint faced, and I think the challenge that all of us have faced in looking at the tax overhaul, is where's the will to improve the future coming from? We kind of get distracted with all of the issues of the moment, and we forget that at its very core, any state, our state in particular, will only thrive if we've done things that put the economics of the enterprise, the state, front and center, and really look at ways in which we can improve the manner in which things happen in the state, and the transformation from raw materials into finished products into population in the state looks different going forward. Because frankly, if we look at what we are, we're operating on a 1960s platform of taxation, and the really smart folks who look at these things across the country and rank us, like, you're not really looking very much into the future for a way to find a way to make Nebraska better. And that hurts. And sometimes it's not the numbers, it's the chatter. And, the legislature, I think, simply needs to step up and take the bull by the horns, look at the opportunity and the results, because I think the Blueprint plan has proven the hypothesis. Is it perfect? Of course not. Is it the plan? No, it's a plan. It's the one that, puts a ball in play. Let's have the conversation. Let's engage in the dialogue. Let's find the solution that Nebraskans think is right. And, our travels around the state, and you've done it, so have I, along with Jim Smith and many others, there's a good bit of excitement brewing about the opportunity to take the bull by the horns and do something different for the future.
Yeah. Meanwhile, if we sit idle, we've watched other states over the last decade figure it out and make their state more attractive and attract the population and growth that comes along with fundamentally changing your tax system, correct?
Oh, yes, absolutely. I mean, the half dozen last year and, more on the horizon. And, the things that Blueprint is suggesting are not radical, right? We've had others who have proven that pieces of the puzzle work. Now, the way I think we put it together is unique for Nebraska, as it should be. But the individual solutions, are not particularly eye-popping or radical when looked at individually in isolation. It's the benefit of doing them together that has the allure for the future, and it gives us a really positive way of posturing Nebraska for the 18 to 34-year-old workforce that we desperately need to grow in Nebraska, and gives us a foundation on which to grow our economy in a very unique way, using the tools and the pieces of the economy that are emerging today and in the future. And it's really more about the future than it is today. The suggestions that are in the Blueprint report give us an opportunity to capture opportunity differently going forward as they emerge. And that is extremely exciting for the younger generation. The folks with whom I visited across the state, they're all thinking about what they want to do 3, 5, 7 years in the future. Well, our tax policy has to facilitate that. If we, by contrast, facilitate an anchor 3, 5, 7, or in our case, 50 years in the past, that's not very attractive to a young entrepreneur. It's not very attractive to a young family. It's not very attractive, frankly, to anyone that we want to keep in the state, because, the rates that we're extracting for participation in our state greatly exceed the benefit that the participant derives. Who do that, right? It doesn't take a degree in economics to figure out that if the return is not worth the investment, you don't make the investment. And I think in our case, we've proven that the investment has an extremely positive return through the Blueprint modeling that's been done. And now is the time to make that investment so that we can start capturing the return going forward.
Well said, Jim. And thank you for your leadership on the Blueprint Taxation Committee. And thank you for joining us today on Nebraskanomics.
My pleasure. Thank you.
Thank you for listening to today's episode. If you want more economic freedom in Nebraska, please visit plattinstitute.org to make a donation to help fund our research and advocacy. Or you can subscribe to our newsletter and learn about today's most important issues facing Nebraskans. It's time to stop the status quo. Let's remove economic barriers and make Nebraskans proud.